Ladies and gentlemen, welcome back to the Crypto News Podcast. We are buzzing as always. Super pumped to have today's guest on the show. Guys, this is the first episode post Black Friday. I mean, the 10/10 crash. There's so many different names. I don't even know what we're going to call it. But Friday was probably the most wild sort of for me on the Eastern time zone afternoon in crypto I've ever experienced in crypto. Was there for the COVID crash, was there for Luna, was there for FTX. I got it in 2019, so I was a little late to the show for a lot of the OGs, but still, that was an insane day, and we are going to get into it with our guest today. My apologies for not having a really good mic, guys. The construction right now is absolutely brutal, and the best I can do is the AirPod Pro Maxes, so my apologies for that. So hopefully everything sounds good. Let's get into it. Today, we have the one and only Nassim Eddequiouaq on the show today, co-founder and CEO of Bastion, pioneer and regulated stablecoin infra, and NYDFS certified provider. Bastion is the stablecoin issuance platform for financial institutions and enterprises. Prior to founding Bastion, Nas was the chief information security officer at A16Z Crypto. Ever heard of it? And held senior management roles across security and infra at Facebook, Anchorage, Docker, and Apple. Holy. Also received an MS from computer science from École d'ingénieurs en informatique. Nas, pumped to have you on. What a bio. You've done it all. Can't wait to get into this. How are you, brother?
Likewise, very good. Thank you so much for having me. Excited to dig into all the craziness from this weekend and more.
Likewise. Let's go. Let's just kick it off with the recap. So, what the heck even happened? A lot of people are saying that this was because of the Trump tariff response. A lot of people are saying this may have been from the Athena USD-pegged. A lot of people are saying that this was strictly Binance and CZ crime season at its finest. A lot of people are saying this was just we were over leveraged to the you-know-what, and what goes up must come down. What the heck happened, Nas?
Hard to know. I think that it sounds to me like everything was triggered from the tariff announcements on the Friday night, and obviously, impossible to kind of cross-reference that with traditional markets because they're closed. And so, crypto runs 24/7, which is a great thing, in my opinion. Having the ability to have the market be responsive to any sort of news at the macro level is quite important, I think. And we'll see how the market reacts. Obviously, today is holiday, and so we'll see how the market reacts tomorrow and the equity side. But I think that it definitely kind of all got triggered by the announcement and of tariffs on China. And I'm really interested to dig myself deeper into it. I think that I've taken a lot of the weekend to take advantage of certain opportunities in the market that presented themselves. And I think that this week is going to be a lot of debriefing, trying to understand how the cascade of liquidations actually happened, obviously on not just on Binance, but kind of like across venues in DeFi and CeFi. I think that the infrastructure overall has held extremely well. We've seen DeFi venues, not just CeFi, but DeFi venues and chains actually absorb the load much more efficiently than the last time that similar liquidations happened, whether that was post FTX and Celsius and others, where I remember Ethereum going all the way up to $500 or like $600 for an extended period of time of transaction fees. We saw Solana and many others be able to absorb a tremendous amount of activity very efficiently. So overall, I would say that just from an infrastructure standpoint, we seem a lot closer to where we should be.
Well said. I want to go over some winners and losers. We'll talk about some winners, some losers, and some lessons. Let's start with the lessons. I think my biggest lesson here, Nas, was besides probably a handful of coins, everything is just a big hunk of shit that no one uses, that no one cares about, and is solely propped up by market makers and leverage. The fact that we saw a lot of coins wick to, one in particular, Atom, which I actually hold some Atom, which is hilarious, but Atom wicked to what? It was, I think, not 1 cent, 0.001. Someone put a limit order in, I believe, for 2019 or 2020, and it got picked up. Like, what was going on? The amount that all of these altcoins got absolutely rashed and are nowhere close to where they were before all of this. Is this a bigger telltale with the industry where there's really only a couple dozen coins that are actually worth holding?
Well, first and foremost, I just keep saying that you kind of like have the circle of life where you start at Bitcoin and then you evolve into altcoins and then you just like go back to Bitcoin ultimately. And I feel like many people who have just been in the space long enough, really get hit at least once or twice and then return to Bitcoin. I think that we're talking about outs in a spot fashion and then in a leverage fashion, and then you just go back to Bitcoin because that is the answer to a lot of what we're all after as an industry. So I would say that I'm glad that the stablecoin infrastructure is also able to absorb a lot of this volatility, because you wouldn't have a very exciting market and a lot of things would go way more down if it weren't for stablecoin jumping from one volatile asset to the other. I think that the leverage is part of it. The other part is just the fact that in order to make markets in such an environment, I just don't believe that market makers are able to make enough markets, right? There's just, if you need to be in a position to absorb a tremendous amount of sell pressure, you cannot do that across too many markets. It's just not possible. And so, and especially because those exchanges were also not very responsive, right? We saw a lot of exchanges really struggling with the from just like a pure robustness and scalability standpoint. And so if you're a market maker, you have on-chain fees for every single transaction that is happening. The CeFi infra is breaking left and right. Then those kind of like the whole ADL like aspects that happen. I think that you have to focus on a certain set of market. And I believe that we saw the limit of what market makers could do at a certain point. Like if the market wants to sell, the market wants to sell, and you can't maintain prices past a certain point. So I agree. I think that we saw the limit of incentives that might have been provided by certain ecosystems for market making to ensure that there is limitation of the volatility of the price. It was definitely stress test to the maximum today.
Well said. Very quickly, we'll do a quick winners and losers segment, and then we will hop over to everything stablecoins. And we'll start with Athena, which unfortunately was the only stablecoin that depegged during Friday's 10/10 shit show, D-Day, Black Friday, whatever you want to call it. But before we get into Athena and the depegging, and of course, everything you guys are doing and stablecoins 101, losers and winners of Friday. Who do you got?
Winners, I would say Aave, Tether.
Huge dub for Aave.
Yeah, definitely. Aave, stablecoins. I would say Solana held like really, really well. Like I was able to transact on Solana fairly easily at low cost. There are other clear winners. What do you think?
I mean, I'm a little torn on Hyperliquid. I think Hyperliquid did great from a performance aspect. The whole sort of ADL thing was I'm excited to see. I'm excited to learn more, Nas, about what happened with those whales. Again, this could have just been FUD. I haven't actually looked on chain and fact checked this myself, but obviously a lot of people said they got ADL'd, but then supposedly that a couple huge whales didn't get ADL'd. I don't know exactly how that works. It's a lot of my pay grade, something I definitely need to do more research on. That would be the only reason why I'd give Hyperliquid a 9 out of 10 and not a 10 out of 10. But I definitely think Hyperliquid snagged a huge dub. On the L's, tons of L's. I mean, 99% of crypto took an L, Ethereum being unusable, all EVM chains pretty much being relatively unusable. 2021 gas fees, like NFT bull run gas fees. Like, what are we doing, guys? It's 2025. Sui, unfortunately, pretty big L with that wick. Atom, huge L. Learned a lot on Friday. Also, all the swaps. Like, I tried to do a couple quick swaps when sexes weren't working. Every swap I did on every single platform that wasn't a sex didn't work. Market makers, huge L. It's tough. A lot of L's on Friday.
Yeah, for sure. I agree. I think that there's also L on the trading community as well for not really understanding as much of the risks and honestly the mechanisms associated to the trading venues that they trade on.
Good
Because
call.
at the end of the day,
Yeah.
it's not just about, obviously, for like the idea, we can talk about it more, but if this is pretty clearly stated in the docs that for example, in that situation, your shorts are going to be closed, and then you're going to be left naked long, like that is on you to build the logic, right? As part of your own trading strategy and your own infrastructure as a trader, to make sure that you close your positions, that don't make you lose money when the ones that are profitable are getting closed. So I think that there is a lot of the larger institutional players were ready for those types of scenarios, but a lot of the folks that we see, as part of crypto Twitter, that might not be those professional traders all the way to actually implementing logic associated to their trading activity, definitely got burned. So I don't know. That's kind of like also my thought is that we need the trading community in the space to mature, not just in terms of mentality, just maturing in terms of the tooling that they have and the ability to actually read documentation and just not blame infrastructure providers and trading venues for implementing exactly like what is said in the documentation.
Yeah, well said. Okay, stablecoin hour. Let's jump into it, mate. Let's start with Athena. What happened on Friday? Athena depegged to, I think it was 62. I think it was like 68 cents for that one chunk. And then I think it had a little wick down to 62. I could be wrong there. We'll call it 68 just for the sake of ease. It went to mid 60s. That is 100% sure. That's what we can say. What happened on the depeg? Also, is there, I mean, you're one of the few people who literally are deep in the weeds, have built the infra, have the certifications. You're literally probably one of the dozen people in the planet who can speak to this at such a high level. Should we also, a little follow-up to that, should we be worried about synthetic dollars? Is that something that can really become truly spooky later on down the road?
Yeah, I want to just maybe reset for listeners on the difference between a synthetic dollar and a stablecoin. A stablecoin, especially in the post-Genius Act world, which really defines that extremely nicely, is collateralized one-to-one with cash and cash equivalents. That might include deposits that are uncovered by credits and beyond, an encumbrance, and then government securities, short-term, highly liquid short-term T-bills and overnight repurchase agreements. So this is highly liquid cash that is always mapped one-to-one or more. Typically, you're required to maintain an extra buffer of liquidity. And you have the legal guarantee for those stablecoins that they're going to be redeemable under T+2, typically. So you have both the guarantee at the collateralization level and then at the redemption timing standpoint. Athena works differently. First and foremost, this is not a regulated asset. The Athena team is brilliant and has built incredible product. I think that everyone can recognize that, and I think that there's a lot of success ahead. What they've built is a financial product that mirrors a basis trade with a spot on the asset paired with a derivative, so that you can actually have the benefit of let's say, a staked asset that might have native yield associated to it, can go up in price. You maintain a short position in case the value goes down, and then the short actually accumulates also yield on an opposing position. And so the sum of the yield actually is really interesting for a lot of very yield sensitive traders. So that also means that the structure is a lot more complex. There's not really a regulator that is looking at it and actually auditing that, in an async way, just kind of like looking at different times. Is it actually over collateralized? Is it done the right way? What is the risk managed? How do you manage your derivatives? Obviously, the short, as much as possible, is off exchanges. So even if the exchanges go down, you're still in possession of your assets. Even if they go bankrupt, you should be able to maintain the vast majority of your assets and over collateralization. But it's a lot more complex. It's a lot more risks than I trust, let's say, BlackRock and Fidelity and Wisdom Tree plus a few GSIBs for the backing of my stablecoin. Like, that's a very different risk. You're trusting Athena to actually close and open positions whenever they need to be closed and open to manage the downside on the price of the spot. And so because those things are not atomic, I think that people have rightfully so, have the anticipation that very fast price swings may impact the collateralization status of USDE. And so DPEG is really kind of like a overloaded term. And I think that like I improperly used it myself as part of kind of like some of my posts, because it is a price dislocation. And you have multiple ways to access an asset. You can access it via the issuer itself, right? So that's primary redemption directly via Ethena. So I mint providing you some asset and then you give me USDE, or I redeem by giving you USDE and you give me USDC or USDT or some dollars. And then you have secondary markets where I actually source my USDE from, let's say, Binance or Uniswap or others. So like that's the part that I'm not entirely, I need to understand a little bit more, because so on the Binance side, complete depeg sounds like it was due to them just relying essentially on the order book entirely for the price of USDE against USDT and USDC. I was looking at the chart and it was like basically staying at 92 cents, 93 cents for quite a bit of time. I think about over an hour. That was the case for some other venues as well, not just Binance. That's the reason why kind of like I'm seeing everyone saying like, oh, Binance, but like I was also looking at Ethena USDE markets on CoinGecko and elsewhere, and I was looking at 2bit and Bitrue and other also had kind of like a depeg that was significant. And so I'm trying to reconcile what everyone is saying around like that was only Binance having some issue on their pricing kind of like risk infra, and then the fact that it was also dependent on certain other central exchanges. Definitely was kind of like remain at one across most decentralized exchanges. But if you look at Aave, for example, Aave literally hard-coded the one-to-one.
I saw that. Yeah.
The price between, and that's not like a recent thing. I think that it was actually proposed back in January and implemented sometime earlier this year. But it's Aave says 1 USDT in Aave v3, 1 USDT is equal to 1 USDE, which is not the case. Those are completely different assets, different structure, different minting and redemption methods, different accessibility. Those are just not the same assets. And so I think that we need to be very careful about understanding that synthetic dollars are just a completely different asset with different risks. A different set of circumstances will be required to take USDE down versus USDT. And I think that pushing those risks onto USDT holders is just not fair. It's pretty clear that the market was perceiving the issuer's health differently than what it was or what it may have been. And so if the market actually trades that below $1 rather than actually buying it and going to redeem it directly at Ethena, that is, in my opinion, and for a very long amount of time, that is, in my opinion, a reflection of the perception of the market, the issuer's ability to handle kind of like the full redemption, not just can I redeem the next dollar? It's more, can I redeem all of the upcoming dollars, which is what you need out of an issuer.
Yeah, out of a stablecoin. Well said. Nassim, you're on a roll here, mate. Quick shout out to Prime XPT. And then we're going to get right back into it. Everything Bastion related and a deep dive on stablecoins. Huge shout out to Prime XPT. Longtime friends and longtime sponsors of the Crypto News podcast. We love the team at Prime XPT. They offer a robust trading system for both beginners and professional traders. It doesn't matter if you're a rookie or a vet. You can easily design and customize your layouts and widgets to best fit your trading style. Prime XPT is also running an exclusive promo for listeners of the Crypto News podcast. Please use the promo code CryptoNews50, that's CryptoNews50, all one word, to receive 50% of your deposit credited to your trading account. Now back to the show with Nas. All right, Nas, let's get into stablecoins here. We've had Genius Act, we have the Stable Act. Stablecoins, mass adoption, they're here. We've been almost 500 episodes, almost 5 years deep of the Crypto News podcast. Couple things that have never, there's really only two use cases that have never ever left. I guess three. That is centralized exchanges, the biggest, that be debatable, either the biggest or second biggest use case. You need centralized exchanges to onboard people. Decentralized exchanges in DeFi, of course, that's a huge one, but that's very broad, so I don't really consider that. And then stable coins, undebatably here to stay, not going anywhere, and continue to pick up steam. Give us the TLDR and present day stablecoins. And for the last part of that, throw in how wild it's going to get when you see the supposedly the Walmarts and the Amazons and these huge Fortune 50, Fortune 100 companies launching their own stablecoins as well. How wild is the stablecoin world going to get?
Yeah, I can confirm that it is going to be wild, but completely hidden behind the scenes. I don't think that people are going to realize essentially how much of a transformation it's going to be. We are currently working with a Fortune 500 company, a Fortune 100 company towards stablecoin issuance. The use cases are extremely diverse. I don't think that people kind of grasp how diverse those are, but the inefficiencies of money and treasury management at a global scale, whether we're talking about a business of that size facing retail users, businesses all around the world, exchanging money between their different entities and moving this money constantly around the globe, is extremely hard to do today, extremely inefficient, requires a lot of people, and
cost effective.
Like the cost effectiveness. I mean, if you look at at some of the payment organizations that are a very finance efficient company, for example, like Uber, great example, extremely finance efficient at a global scale, has built insane payment infrastructure by having the best engineers and the best team at scale. And the promise of stablecoins is to be able to not only do it extremely well, but to do it extremely cheaply as well. So in terms of the use cases, I think that it falls into three buckets from what we see for those enterprises, right? First and foremost, tech companies want to have the economics of being banks without having to be banks, and stablecoins help them with that. The ability to just capture the economics on the dollar every time, or a unique of currency every time that it flows inside your ecosystem, touches your users, touches your platform, and moving that into an asset that generates a tremendous amount of value for you that you have full control over is incredible. You can control the yield on the reserves, you control the redemption fees, you control the flow of the money. It's incredible. And you can do so without having to be a bank by partnering, for example, with a company like Bastion. And those large companies, we're typically seeing three buckets. The first one is completely internal, optimization of treasury management system and intercompany coin for settlement between entities. The second bucket that we're seeing is for B2B use cases, facing merchants, facing app developers, facing creators. And then the third piece, the third bucket is B2C related, especially microtransactions at a global scale and P2P payments. So on the internal treasury management system, think companies that have dozens and sometimes hundreds of entities all around the world, constantly receiving money, processing money, sending money abroad. And you have kind of like this network, this web of payments happening globally between those entities. The problem is that as the money moves, typically through highly inefficient payment rails, it is not being invested. It is not generating compounding interest over time. And so what stablecoins promise to these companies is you can finally have this liquid money that can move 24/7 between all of your entities. You don't have to wait until Monday morning. You don't have to wait until the after banking hours to be able to transact. It is constantly moving all around as money. And at the same time, their yield is going to accrue in your treasury at the reserve level. So you're constantly capturing the vast majority of the yield while the money is moving all around the world 24/7. So that's the first thing, having this is a massive use case. Everyone is probably going to get bored out of their mind out of this. Trust me, the large corporates are beyond excited about this because they move sums of money that people have no idea about. in terms of B2B side, you actually have a lot of these companies that get paid dozens of billions of dollars in money that they receive from clients from all around the world that might be selling hardware, they might be selling software, they might be selling various service and products. And at the end of the day, their customers are paying with a highly inefficient currency across highly inefficient rails. And having the ability to incentivize paying with stablecoins so that by the time your customer even begins the payment to pay you, you're already accruing yield behind the scenes. It's actually in some cases, if you add all of these purchases, it's actually dozens of billions of dollars that again are not invested, and you could be in a position to incentivize like discounts, 1%, 2% off in sometimes very low margin businesses to gain even more market shares over time. And so this is something that is really, really massive for a lot of companies on the B2B side. And then on the B2C side, just it's opening entire markets for them. If you look at on the gaming space, for example, microtransactions are how typically most of the whales are paying for in various games. So I'm opening the next pack and the next pack and the next pack and the next pack. And you do that constantly with a kind of like double tap, whether that's on Apple Pay and others. And before you even realize you've done, thousands of dollars of purchases in game and in ecosystems. And the problem to do that, it happens in the US because we kind of have the banks in the same location as the users. But if you want to do that globally for those microtransactions, it's an absolute nightmare. Typically, the transaction fees, especially through cards, can raise all the way up to 7%, 8%, massive flat amounts as well, preventing really microtransactions to be worth it. And so if you look at gaming for non-US users, it's a lot of, the minimum is at $5 or $10 or more equivalent. So a lot of microtransactions enable for a lot of companies, both on the way in, getting payments, and on the way out, paying creators, paying advertisers, etc.
Jeez, what a start, man. So stables, we could talk about these for so long. Let's take a quick step into Bastion for a sec. And my apologies if I keep pronouncing it wrong. Bastion, I call it Bastion.
No, that's correct. Bastion.
Okay. I was like, I want to double check that. You guys snagged a NYDFS trust charter. So the non sort of B2B reg folks, to us, it's like, okay, what does that mean? But this is absolutely massive. Tell us what exactly this allows you guys to do, which is incredible. Kudos to you and the team. Congrats, well deserved. But like, this is a huge, massive stamp of approval.
Yeah, New York, and just props to the team at Bastion. The New York Limited Purpose Trust Charter is an entity that is regulated under the New York Department of Financial Services to offer highly regulated institutional services. So if you look at, that's what typically Ripple has for the issuance of Ripple USD, and this is what Coinbase has for Coinbase custody. Those are essentially the entities that have among the highest level of trust and regulatory oversight for activities such as treasury management, qualified custody, stablecoin issuance, and much more. And Bastion has obtained a New York Trust Charter. We work closely with our regulators on additional activities that we would like to unlock as part of out of this trust charter to offer more institutional services, stablecoin issuance, white label stablecoin issuance being one of them. And we're extremely excited because if you look at what it takes to make a Fortune 100 company comfortable with another party, not just providing a technology, you're not providing a technology, you're not even providing a regulated service for them. You're issuing their currency with their brand globally, and you're managing it, right? That is as high as it gets in terms of reputational risk and financial risk and all the aspects associated to that. And so it requires these large companies will have a checklist that is as high as my building, and my building is pretty high in terms of questions and requirements from a regulatory and compliance standpoint. And a New York Trust Charter actually provides you with this level of confidence, which is extremely rare. And the other parts to that is that if you look at the Genius Act, it actually explicitly says that you have to have either a bank or a trust charter in order to be able to be compliant with the Genius Act. Today, a lot of issuers actually do it out of money services business that are registered with FinCEN and have money transmitter licenses. Those are not supported by the upcoming frameworks. And so for us to be already in a position to be compliant with the upcoming Genius Act, even before the regulatory framework is designed at the federal level, is massive, because these companies, they want to move now. They understand that there's a first mover advantage. They want to be the first ones to move. And so working with a company like Bastion that already has the license that will be Genius compliant is absolutely massive for their risk management at the corporate level.
That's huge. And we're getting tight for time here, mate. Before we let you go, what exactly do you guys do? I mean, it's you guys are the in-house shop. If, like you said, if you are a Fortune 500 company, you want to launch a stablecoin, hit up NAS. If you want to launch a consumer-based stablecoin, hit up NAS. Anything in the stablecoin space, you go hit up NAS. But you can explain it better to me. What exactly does Bastion do?
Yeah, at the very simple level, Bastion helps institutions and enterprises launch and grow stablecoins. And we do so by having the infrastructure that enables you to do that in a compliant and secure and regulated way, which means that we have the stablecoin issuance. You can essentially rely on us to launch your stablecoin. We will be managing your reserves, the liquidity, the smart contract management, and the compliance operations associated to, the full life cycle of the stablecoin. We have the custody infrastructure that enables you to not just issue it, but have it be integrated as part of your treasury management system, payment system, applications globally. And then on and off ramps, because it's not just about having a stablecoin and transacting it, it's about converting it seamlessly in and out of fiat globally. So Bastion essentially has this issuance, custody, and on and off ramp infrastructure to launch and grow stablecoins.
Love it. Before we let you go, any hot takes? Give me a stablecoin or a market hot take, preferably a stablecoin hot take. What do you got for us?
Yeah, I think that a hot take is that the stablecoin industry is going to prevail against the bank lobby pushing against distribution of rewards associated to stablecoin yield, which we've been fighting on for a very long time. And banks are trying to protect the moat that they have around their deposits and having some yield shared on the deposits with their customers. They understand that stablecoins are commoditizing that very quickly in the form of reward programs, just like any company should be allowed to incentivize their own users. And I believe that right now the fight that we're seeing will be won by the crypto industry. And I'm extremely excited about it. And I think that banks will have to step up their game tremendously if they want to be able to survive in a stablecoin world.
You're probably one of the few people who can speak on this. How scared shitless are the banks of stablecoins right now? Like they got to be tripping balls, because I mean, think about how much they just make on interest and all the remittance payments, the FX, everything. Like they got to be tripping right now. No,
I think that they understand that it is not going to be deposits or stablecoins, but it's going to be deposits and stablecoin, where within the platform, you're going to have deposits, but to be able to be interoperable with the future of money rails, you're going to need to support stablecoin. And so I think that all of these banks are trying to understand where do they use stablecoins and where do they keep their traditional deposits. Something that people, by the way, the listeners probably don't know is that the bank make way more money out of deposits than stablecoins. Yeah. You can actually lend it in the case of deposits to people buying a house, buying a car, etc. You can actually, pop up the rates. A stablecoin is very clear. Like this is short-term, government securities and T-bills. Like this is as high as it's going to get. And so they're trying to understand how do they cannibalize, how much of their existing business do they cannibalize? It's not if, it's how much. And so we're going to see a lot of iteration, I think, from banks. I'm actually a lot more excited to support large technology institute companies and enterprises, because these guys, they move money 24/7 around the globe constantly. They have the distribution, they have the global distribution, and they're excited. For them, it's a brand new revenue stream. So they're extremely hungry for it, and they're coming for the banks.
I love it. Nas, what an episode. Appreciate you going on, bro. Before you go, where can our listeners find you personally and, of course, Bastion online and on socials?
Yeah, find me on LinkedIn at Nassim Eddequiouaq, and on Twitter. X. I need to. It will never.
Twitter. I still call it Twitter.
On X at NassiWeezy. And yeah, Bastion.com. We have a ton of people who are excited at our company to speak about your stablecoin use case if you're interested in launching and growing a stablecoin.
Folks, what an episode with Nas, co-founder and CEO of Bastion. What an absolute masterclass on everything stablecoins related. If you guys enjoyed this one, I hope you did. Please do subscribe, hammer that like button. It would mean the world to my team and I. Speaking of the team, love you guys, everyone at Crypto News. Thank you so much for everything. Jay, you're crushing it. And back to the listeners, guys, keep on growing those bags, keep on staying healthy, wealthy, and happy. Go touch some grass if you got wrecked on Friday. And remember, you've grown your ports once before, probably twice, probably thrice, and you will do it again. Stay positive, keep on grinding, keep the screen time up, but also keep the grass time up as well. Love you guys. See you on the next one. Ciao.